Good morning. Thanks so much for tuning in to Trade Setup. Before we delve into the Fed, here's the big thing that came out on the political side as well, if you will. Prime Minister Modi, in a mention or in a message or in an address, mentioned, oops, I don't know where this has gone, but yep, here it is. India will be amongst world's top three economies in BJP's third term, as per Prime Minister Modi. Well, this is um, you could argue that mathematically a logical promise as well, but this is a big one coming in from the man himself. So read up on it. The stories there on our website as well. But this is interesting. So from an India perspective, I thought this was important. From a world perspective, what the Fed has said is also very, very interesting. That they, of course, I mean, they've hiked the rates. They've quote unquote stayed hawkish, but I thought in some fashion also dovish in that they said that we will not hike the rates at every term. Somebody who analyzes this very, very closely and gives us his version of what it impact would be on risk assets is Jeffrey Tennis. And as usual, it's our appointment with him on this. Jeff, great having you. Thanks for taking the time out. Good evening to you.
Good
What
evening.
did what did you make of the Fed commentary and the action, of course?
Well, the most important thing was, of course, the commentary, not the action. I mean, it was widely expected the Fed would raise rates by 25 basis points, and they've done that. I think the market was probably somewhat unhappy at the lack of clarity about what the Fed really said. The Fed certainly kept all their options open. Jay Powell basically saying they might raise rates next time, they might not. And therefore, I think there's a lot of uncertainty as to whether the hopes that have been generated in the last 2 or 3 weeks that this might be the last rate hike, I think that's now a little bit put into doubt, simply because the Fed has said, look, we have to watch to see how the data develops. And my thinking actually, and perhaps we'll delve into why that should be, my thinking is that probably is one more rate hike to come after this one. But, basically the Fed is leaving everybody guessing at the moment.
Yeah, that it is. But just thinking about it, Jeff, we told by people who just visited the US that the economy is not looking all that bad. We might skirt a recession, or it's not a full blown uptick out there. Do you reckon that the markets will be happy with probably just one more hike? Because anyways, people were talking about two rate hikes and then an extended pause. Do you think if that's the outcome, then risk assets would take it well?
Oh, I do think risk assets are going to get through this anyway, because come what may, we are close to the top of the rate cycle, even if we're not at the top. And clearly, I think clearly, the good things about what is going on in the U.S. right now is, first of all, the economy is proving itself to be very resilient, perhaps more so than people thought. We're going to get the second quarter GDP numbers tomorrow. It'll be interesting to see what that comes up with. And at the same time, although my numbers tell you that the inflation rate at 3% in June headline may well have hit the trough for the year. It may well not go down any further this year, because the comps or the base effects with the second half of last year get more challenging now. Nonetheless, inflation is clearly much lower and will eventually move down towards the 2% level. So I think markets will continue to do well through all of this. And I think the thing that would put the markets off would be if you saw a substantial acceleration of inflation, which I don't think you'll get, which would mean the Fed would have a lot more work to do. And I just don't think that's the case. The key here is that interest rates are either at their peak now or they're extremely close to their peak. And I think that represents a good outlook for equity markets going forward.
What would you watch out for the most? I mean, people are talking about how it's been a narrow rally, and in the US, you might not see a buckling down because while the Nasdaq may falter because it's gained so much, some of the others will come to the fore. Do you expect the second half to be more like that?
I think so, yes. And of course, as your viewers will know, you've had this extraordinary, I think it's 11, 12 day gain in the Dow now, which is not very relevant these days, the Dow 30. but still it's the longest winning streak for the Dow since I understand 1987. That itself is telling you there's a bit of a broadening out, and of course the Nasdaq has lagged a little bit recently. So you are getting something of a broadening out, which I think is going to be very, very helpful for the longevity of the bull market anyway. But I think what is getting lost in the shuffle here, which is very, very important, especially for an EM guy like me, is that the emerging markets have really had a very good month in July. They're up about 5% in July. We're up over 8% on the year again now. And I do think this is a very, very good environment now for emerging markets because the US economy looks like it's going to skirt recession. The dollar, I think, as the Fed gets towards peak interest rates, is going to start to drift low, which is always good for EM. And we may be about to get another big stimulus out of China. The Chinese market's flat on the year, so it's been a big drag on the performance. So I see EM equities doing very well. In fact, my call remains that EM equities will go up 20% this year in dollars, and we're up about 8 to 8.5% currently. And so I do like equities here. The US looks good to me, a broader US rally, but I think EM looks particularly good here.
Well, that's music to the ears. Jeffrey Dennis, thanks so much for taking the time out and giving us your thoughts. Really appreciate your time this evening. Have a great one.
Thank you.
Well, that's our usual appointment with Mr. Jeff Dennis. Now, move on to what could this mean for India. So firstly, what the US markets did, right? Precious nothing. And they kind of stayed, the futures are also kind of stable. So no big changes there. The GIFT Nifty should be the yields may have moved a little bit. So that is fine, 3.87. But the GIFT Nifty probably showing a start, which is, again, some bit of consolidation, though I must say that yesterday I was a bit surprised with the kind of move, right? So the Nifty 50, the key stats of yesterday, Nifty 50 ended higher to close at about 0.5% or thereabouts at 19,778. This is a bit of a surprise for me, to be honest, because I was expecting more of a consolidation move. The PSU banks were the best gainers, 1.5%. PSU Bank, Nifty PSU Bank, followed by the Nifty Realty, which was up about 1.19%. And we saw strong buying in L&T. We saw strong buying in cement stocks, hosiery stocks from amongst the smaller names. So quite a bit of movement out there that is happening in select pockets, even in periods of consolidation. Now it's an expiry day today. So can that change? That remains to be seen. So what's the trade setup for the day today, viewers? Here's the deal. I think upbeat results help the markets exhibit resilience ahead of the Fed. Banks are uncertain, but large domestic investors and smart names are still very constructive on the private banking space. Now, it'll be interesting because Mihir Vora, for example, day before yesterday said also that he still believes that instead of the private banks, it's the NBFCs that he likes more. But hey, be getting you a session with Utpal Sheth and Ramesh Tamani soon, sometime next week. It'll be interesting to see what they are saying. But there are people who are saying that private banks still give you a big bang for the buck. Analysts have largely remained constructive on building materials post the con calls. That remains a pocket to watch. If you just see what the brokerage notes are talking about Asian Paints in the session today, that tells you the story, or that tells you the piece that I'm trying to tell you about. So do watch out for what's happening at that end of the market, particularly building materials. Lastly, uh, the US numbers for all the pharma companies are looking strong, along with very constructive commentary. Dead rate, Dr. Reddy's, Cipla is looking very strong. I suspect that today could well turn out to be a pharma day of sorts. So do watch out for that as well. Foreign investors bought about 922 crores, 922.84 crores. DIs bought about 470 crores. So the institution buying seems to be okay. Results, not too many, even if there are not too many large caps, with a Bajaj Finserv or a Nestle being the ones, a lot of important ones, right? Bharat Electronics, Railtel, uh, Indian Hotels, IEX, Westlife, Laurus Labs, Shyam Metallics, and Godari Power. So Sona BLW. So a clutch of very important names to watch out for in the session today. What about stocks to watch? Well, first, an update that some of these stocks are going ex-dividend. So please keep them in mind. If there is a kind of a move out there, and that some of it could also be because of going ex-dividend. But the stocks to monitor, well, RBL Bank, and I'll add Mahindra and Mahindra to that too. So M&M gave out the formal release yesterday that they've acquired 3.53% stake in RBL Bank as an investment. May consider further investment subject to pricing, regulatory approvals, and required procedures. Company's stake in RBL Bank will not exceed 9.9%. So if they don't want a controlling piece, they'll remain at 9.9, in which case people will wonder why is it that Mahindra and Mahindra is going out and doing, you know, putting cash to work in pockets which are quote unquote unrelated, unless there is a thought of M&M Financial and a bank, etc. Why do this? So very likely M&M could have a bit of a corrective move. Very likely RBL Bank, which was in an FNO ban until yesterday, because there were a lot of longs out there. The market had a whiff of something like this happening, maybe, I don't know. But there were a lot of longs for the last few days and not just yesterday. And and RBL Bank, and because M&M very likely, yes, is saying that they might want to up the stake, but not really go out there, make it their own subsidiary. If I mean, not subsidiary, but their own game, if you will, is could that disappoint the street? Let's see. It'll be interesting to see. RBL Bank ended up about 7% yesterday. Could it see a bit of a pullback too? Is the key question. Let's wait and watch. RVNL, the government will sell about 5.36% stake in the company via OFS. The offer for sale opens Thursday, it's today, for non-retail investors. The floor price for the OFS will be 119 rupees per share. So do watch out for this one. Then the other big one, right? Asset management companies will be in focus. Could be sentimental impact today. Let's see, because Geo Financial Services and BlackRock have inked a joint venture pact to foray into the asset management space. A 50-50 JV, Geo BlackRock will deliver tech-enabled access to affordable investment solutions. Read passive, read ETF. That's the way US went. That's the way India seems to be going. We already have Zerodha saying that they want to do something like this too. A clutch of other existing AMCs are also rolling out passive products in a meaningful way. So, can this, both parties will invest $150 million, which is 1230 crores, which is not chop change, right? Nearly 2400, 2500 crores for a venture like this. So they're serious about this. Could this bring about a sentimental impact in some of these stocks? Very likely. So watch out for these. Then Tech Mahindra, not a good set of numbers. I mean, look at that. Revenue is down 4%, 13,159 versus 13,579. So you could argue that in some sense, this pullback was anticipated. They've come in much worse, which is a problem. The below the revenue line numbers are even horrible, right? 32%. I use the term horrible because Tech Mahindra doesn't quite deliver something like this usually. 32% downtick in EBIT. When did you last see that happen? I think this must be the sharpest EBIT fall for Techem in a long, long time. 891 crores, 1435 crores. Big miss, really. EBIT margins, big miss. Net profit, big miss. Deal wins at multi-quarter lows. So, there's a problem that Tech Mahindra has encountered in quarter one. It's not been a strong start to the season. But there's a new management, and could the markets bet on that is the question. So Morgan Stanley says that they are equal weight, target price of 1060. They believe that Q1 performance will rebase consensus estimates for FY24 with downside risk to FY25 as well. But investors will not give up hope of a margin recovery, especially with new management in place. Now, that's the key thing out here. Morgan Stanley lowers the FY24 EPS by 19%, owing to a 31% Q1 earnings miss. They cut their this thing FY26 and 25 EPS as well, not by a big number. They see better risk reward in HCL Technologies. Now, other brokerages are mixed. Jefferies underperformed, target price cut to 900. Nomura buy with a target price of 1316. So it depends how you look at it. I suspect that Tech Mahindra could see a start which is soft today. Can it recover from that? Maybe. I like Morgan Stanley's argument of how look at the across the board, and are there other players which are priced similarly, so to say, on the valuation front, and do you want to bet there because there might be a bit more certainty, if you will, on those pockets. So viewers, let's if we get out from this plate, Yeah. So, the thing is this, that IT is under a bit of a cloud. You got to pick the best horse. There are a bunch of companies which are delivering. Maybe you want to look there. That's the key point. Then Dr. Reddy's is the other one. Revenues up 29%. Did well, much better than estimated. EBITDA 119% higher. Operating profit margins 30.5 versus expected 25.5. Net profit up 18%, 1405 versus 1008 crore. The stock is up 9% in the last 1 month, but boy, has it done well? Yes, it has. And which is why I think brokerages are constructive. So Jeffries, for example, has a buy. The target price has been raised to 6330 from 5600. They say that the Q1 PAT beat Jeffries estimates by 22% due to various factors. The strong outlook for the US in the near term and steady growth in base business keeps us constructive on Dr. Reddy's. Not surprised there. So it's up 9%. Could it be a bit more severe than what it otherwise would have been? Maybe, but I still think these are good numbers. And mostly, pharma stocks seem to have done really well. If you look at the Nomura note on Cipla, sorry, can we jump there before we come to Axis? If you look at the Nomura note on Cipla, they've done the same thing. I mean, the buy target price raised to 1229, 1Q ahead of estimates, US and India ahead of estimates. Management has raised FY24 EBITDA margin guidance to 23 from 22, and the intensity of price erosion in the US declined as per the management. Nomura has raised the FY24-25 EPS by 3% and 17%. Sorry, that's a bit of a error at our end. Effectively, there are two separate sentences plugged into one. But if you get the drift, right? Cipla, Dr. Reddy's, the US generic exposed companies are talking really constructively about what's happening there. And I think that should be a bit of a leg up. So watch out for Dr. Reddy's and Cipla in the session today. Pharma, good going there. Then Axis Bank, the numbers came out. I thought the Jeffries note summed it up well, so I thought I'll bring that to you. Buy. They have a buy with the target price of 1200, but they say that the Q1 earnings were ahead of estimates with higher NII and lower credit costs. NIMs held up better with 9 basis points QOQ fall in core NIMs, but the growth trends in the balance sheet were weaker, but asset quality held up as well. They see a 16% CAGR, and Axis is amongst their top picks given a favorable risk reward at 1.8 times 12-month forward adjusted price to book. So that's the view on Axis. So those are some large caps. Very quickly, some mid caps, Jindal Stainless numbers. Revenues up 25%, marginally ahead of estimates. EBITDA margins 11.7 versus 10.5. On that base, by the way, these are good numbers. Net profit up 45% at 737 versus 479 crores. All in all, look solid, may react positively. Colgate Palmolive, I thought was marginally ahead of estimates as well. In fact, on the margins front at 31.6 versus estimated 29%, and versus actually delivered 27.2%. These are very good set of numbers. Who knows? May react positively as well. So do watch out for Dr. Reddy's too. Now, have I missed out on something? Let me just try and see if there are any brokerage notes that I may have missed out on. Morgan Stanley is an underweight on PNB, target price of 55. So watch out for that very quickly before we wrap up. Yeah, I said brokerages are constructive. Macquarie on Cipla is an outperform. Then Asian Paints, like I said, Macquarie outperform target price 3900. UBS buy target price 3700. Brokerages are constructive on Asian Paints as well in the session today. HSBC buy target price raised to 4000. So there's some traction there. So do watch out for that as well. So lots of things to focus on in the session today. Lots of earnings as well. Mahindra and Mahindra and RBL. A bank as well, and the asset management companies. Watch out for all of these. Lots of conversations. Kenneth Andrade, I think, joins in today. Tech Mahindra at 8:35. Yes, so that is to be watched out for. Alpha Muggles at 10:30 a.m. today. Kenneth Andrade in conversation with us. So this is a very, very neat conversation. You're going to want to tune in for that as well. And a clutch of earnings conversations a bit later on to try and tune in for some of those. Thanks so much for tuning into the Trade Setup.